Hi, everyone. Thank you so much for joining us for today's session. Super excited to be hosting everyone. My name is Carolyn with Bridge. I'm going to be moderating today's call between our panelists. So today's session focused on how the VRGL and BridgeFT partnership can help you acquire and retain clients. I thought we could start off with some intros to our panelists. So Dave, if you want to kind of tell the group a little bit about yourself, go right ahead.
Sure. Thanks, Carolyn. Good afternoon, and thank you all for joining today's webinar. My name is Dave Hagan. I'm the Chief Commercial Officer here at BridgeFT, responsible for our go-to-market strategy and teams. I joined BridgeFT about 6 months ago after leading digital strategy and third-party integration for Goldman Sachs's RIA custody business. I've been in the wealth management industry now for a little over 20 years, and super excited about today's webinar and our new partnership with VRGL. As we all know, the client experience starts well before the assets come in, and new technologies like VRGL and BridgeFTs are really dramatically changing the entire client journey. We can't wait to share, some of that with you all today as part of this webinar.
Thanks so much, Dave. Super excited to have you on the call. And also would like to welcome Josh, representing VRGL on today's call. Josh, could you tell the group a little bit about yourself?
Sure. So thanks, Carolyn. Thanks, Dave. My name is Josh Smith. I'm co-founder and CEO of VRGL. I'm really excited to be here today. For many of you, it'll be the first time that you're getting an introduction to VRGL itself, and so excited for that opportunity. Prior to VRGL, I was co-founder and CEO of a company called Solovis. That company was the investment book of record and performance book of record for some widely known endowments, foundations, pension funds, and family offices. So brought a lot of those kind of institutional analytics to bear here in VRGL. I'm really excited just to share with everyone how we think you can accelerate the client acquisition process. So I know we'll get into it.
Great. Thanks so much, guys. Yeah, we have a lot of great content today. So just quickly before we dive into it, I'll just go through the agenda. So firstly, we're going to dive into a little bit of an intro on VRGL. As Josh mentioned, this might be your first time learning about VRGL, so we'll make sure to give you guys some info on that. After that, we'll talk a little bit about BridgeFT and our platform and how we work with advisors. After that, we'll move into the most common challenges that advisors face when it comes to their technology stack. After that, we'll go ahead and share some details around how Bridge and VRGL have partnered to help advisors overcome those challenges. Then we will go into a full demo of the VRGL platform, so you will actually get to see it in action, and Josh will take you guys through that. And then lastly, we will have the live question and answer session. So I did want to let everyone know that you don't have to wait to submit your questions till the end. Go ahead and use the question answer panel in the Zoom webinar tool and submit your questions at any time. And as we're going through, I'll keep an eye on those. And then at the end of the session, we'll go back and we'll actually address each personal question one by one. So without further ado, Josh, I would love to turn it over to you to talk a little bit about VRGL.
Great. And guys, I'm not just going to read the slide here, so hopefully I can be a little ad hoc. Ultimately, what is VRGL and what are we trying to do? We're trying to help an advisor create that trust and create that connection that oftentimes is, the way I like to define it and say it is the engagement between an advisor and a prospect, especially one that's not a really, really warm introduction, is all about relationship building, whether that be golf, tennis, lunches, dinners, drinks. Ultimately, what we're trying to do is provide a platform that creates objectivity, ultimately helps remove an opportunity cost or cost associated with that exchange of information, the exchange of the statements between an advisor and that prospect. We help fully automate that process. And then be able to reflect that information back to the advisor and reflect the information in such a way that it helps provide a roadmap to the advisor of where they can potentially add value. And by showing that objectively to the prospect, it allows the prospect to really be able to ascertain, hey, this makes sense to me. And clearly you've still got to like the person, you've still got to build a relationship. We're not saying that's not critical, but adding objectivity and a bit of a quantitative lens to that advisor-prospect relationship, we think is really important. As part of our solution, already mentioned, we call basically this process the client acquisition and proposal management process. What we do is we automate the data extraction from any PDF financial statement that a client or prospect wants to provide. That can be a financial statement from one advisor, multiple advisors across one or multiple months. And then we take that information, we extract all the transactions, positions, tax basis, tax lots, realized gain loss, fees, everything from that statement. And we run our 5 pillars: performance, risk, diversification, taxes, and fees. Once that prospect becomes a client, whether or not it's 100% of the assets or just a portion, you can use the analytics, you can use the reporting to continue reporting on that client's current assets. And that's really where our relationship with Bridge comes in. And I know we'll get into that here more in just a second. Ultimately, the platform is designed to be used by one advisor or 500 advisors or thousands of advisors within the firm. There's actually cross-firm capabilities for compliance purposes and things like that, but not going to get too specific into the technology unless there are questions on it. So kind of turn it over to the next slide, I guess. So, what is our goal? One I've already stated, we're here to kind of revolutionize the way you engage with prospects, at the early phases of that client prospect engagement. What we've seen, and the moral of the story is, well, how does this mean more money? What we've seen is the clients that have used VRGL, that use VRGL today, have been able to shorten time to revenue by 50%. And where that decision is yes, we have seen a 25% larger check. So said another way, if typical time in your pipeline from the first meeting of someone to them making a decision was 6 months, we've seen that now be 3 months. And if they brought, $500,000, $1 million on the platform, we see that number tick up by roughly 25%. Why? What are advisors telling us? What are their clients telling us? It's because of creating that objectivity, creating that quantitative lens, allowing the prospect to truly understand more thoroughly what is going to happen and why that's differentiating from where they currently are today, as opposed to just legging into a relationship, has been, really, really valuable. I've already mentioned the kind of removing this tedious manual process. You never have to worry. Make it very clear. It is now forever VRGL's problem. If you're a VRGL client, you never have to worry about extracting data out of a statement again. That process is handled entirely by our application. And where that process fails for whatever reason, we have an operations team who will synthesize and extract that information. I mentioned my background working with some of the largest institutional allocators, pensions, family offices, endowments, and foundations in the world. We've brought many of those institutional grade analytics, simplified them, brought them to the platform in the form of our 5 pillars that we'll run through a demonstration in a little while. So next slide.
Thanks so much, Josh. And Dave, if you could tell the audience a little bit about Bridge.
Yeah, no, great. Thanks, Josh, on the overview on VRGL as well. So for those that aren't familiar with BridgeFT, a little background. And again, I won't read through the slides similar to Josh, but we are a wealth tech company, and we do power a number of the industry's top advisors, institutions, TAMPs, fintechs with our data-driven approach around both data and software, providing advisors and those institutions the tools and capabilities they need to really power their practices and next generation applications. Many of these firms leverage our technology to automate a number of critical back office functions, which we'll touch on a little bit as we go through some of the workflow and tech stack discussion, and really powering their digital wealth management ecosystems through our technology platform, which is truly modern. It's cloud native. It's completely API first. We deliver a multi-custodial software and data aggregation platform that can seamlessly integrate both data, insights, tools, portfolio management, automation, allowing firms, enterprises, and even fintechs themselves to deliver unique, personalized client experiences.
Great, thanks, Dave. And I thought it would be worthwhile to kind of walk through our Wealth Tech API and sort of like how that network works.
Totally, yeah, and this is I joke it's the spider slide, but this just gives you sort of an illustration of sort of all the the different touch points related to to our platform. We very much have viewed ourselves and continue to view ourselves as a technology enabler. So in the case of VRGL, As I said, very excited about the partnership and the integration, story that we're building. But ultimately, we're providing, a host of different sort of capabilities and services. VRGL is also a client of ours that leverages our data aggregation platform to streamline, the data management component of their offering as well. So working from sort of bottom to the top of this slide, our Wealth Tech API is really the cornerstone of our solutions, and what we feel really sets us apart from all the others. It's an open suite of APIs that offers full connectivity to that multi-custodial data aggregation platform. Underneath the hood, it's built on a ledgerized portfolio accounting system. So we are ingesting, aggregating data from all the major custodians, from hundreds of additional other data sources. We normalize that data. We actually reconcile that data. We calculate performance on that data. We enrich that for not only performance data, but also value-added analysis to power other solutions. So ultimately, that API is available. Both we're a consumer of it, so our core platform called Atlas uses that API to deliver core services around client reporting, client billing. We have our own client portal and model marketplace, and we'll get into a little bit of that. But ultimately, that API is available for fintechs, for TAMPs, for advisors to really leverage to get access to the underlying data to build those unique experiences. And really, the API eliminates those outdated sort of data file transfer requirements, or really the need for any data infrastructure that could put the firm at risk for housing PII data or transfer of data from from different systems as well. So the API provides sort of a single source to all the data, kind of a build once, access many approach that a lot of our clients are leveraging as part of the integration methodology. So with that, I'll hand it actually back to Josh to talk a little bit about sort of critical areas of the advisor tech stack.
Yeah, no, for sure. And let me just kind of follow on real quick, Dave, to what you were saying, a little bit about, our use case. We do not want to build integrations with every single custodian and potentially other partners out there. So to be able to have Bridge kind of be that central repository, kind of code against a single API, they've already done the standardization and the normalization of the information. I mentioned the retention component of what it is VRGL does, being able to reflect, once someone's moved from a prospect into a client. Our early clients had suggested, hey, we saw this as a prospect. We want to see this as a client now too. Not only do we want you to report on our held away assets, but our ongoing assets. And that's where the Bridge integration comes into play. Some of that enrichment we've talked about, or Dave talked about, comes into play. And so it's really valuable from that perspective. And so with that said, talking about, the traditional advisor workflow, and this by no means has to be the perfect advisor workflow, but these are generally the areas that we see existent within, a wealth management organization. What we really ascertained, as I've said before, there really isn't anything in the advisor's tech stack between CRM and now I'm basically ready to be a client. And so I want to load you up on my reporting platform. You could talk about platforms like Riskalyze or Stratify, offering some position-based risk services. This idea, though, that within the traditional workflow, you kind of have to go through, CRM, very relationship building. Now you've got your onboarding, and that could be, in one single application. We're really excited about the fact that the combination of Bridge and VRGL really helps synthesize a lot of these things together, really into two consolidated applications. And so while we're really focused on the front end, we bring aspects of these downstream workflows into that front end process. So you can talk about what your rebalancing looks like. You can talk about tax efficiencies. You can talk about a fee profile. You can talk about what performance has been and what we would expect it to be in certain ex ante scenarios. And so the idea of being able to bring some of these downstream concepts into the front end of the conversation with the client really is something that VRGL does. And then being able to tie that into, kind of a soup to nuts, whether it be the Atlas platform or API first kind of construction, the way that we're using it, being able to tie that into some of the actual streams that Bridge takes care of. And I'll turn that over to Dave to talk about those.
Yeah, no, thanks. And I joked earlier, with a colleague as we were going through sort of the presentation and taking a look at this workflow. One version or another of this workflow has existed in this space for well over 20 years, right? There's a host of sort of capabilities and technologies, and there's been a lot of evolution over the last few years in regards to technology itself. Many technology providers, a lot of them siloed, have come and gone, trying to fill the void in certain areas, very focused in one area, and trying to connect the dots, across the workflow. And Josh, to your point, the idea here is, embedding, some of the analysis, some of the logic up front to help with, that acquisition component, but also as not only bringing the client on board, but also maintaining that relationship over time and ensuring they have, what they need. I think the nice part about sort of the evolution of the workflow is, the technology is finally caught up. And really for advisors and for even firms that service advisors, the main challenge, continues to remain on how to differentiate their service offering around this workflow. How do they best assemble, their technology stack to accommodate, different types of clients, different types of business needs. But ultimately, it's about sort of managing time and managing your resources. I think I saw, a recent article from Kitsis that said, advisors spend about 50% of their time on back office tasks. I talking to advisors almost daily. Some would say that's probably more. Generating invoices, following up on support calls, doing things that are really meant to keep the lights on and keep the practice functioning. But only a small fraction of the time is really spent meeting with clients. And how much of that time is spent in the preparation phase, how much of that time is spent in the servicing phase, it's really hard for advisors to find the time to spend with their clients, and nevertheless trying to prospect for new business. So providing, and looking for efficiencies across this workflow, looking for areas where you can embed sort of key capabilities, key decision points, key metrics to help sort of make that process more efficient, is ultimately comes down to having the right, sort of data up front so you can make those decisions, but, the right technology and tools to make you as the advisor more efficient, or a firm that's servicing advisors out in the field, making the process that much more efficient in regards to managing those relationships long term as well.
Absolutely. And I think that's the perfect transition into our next portion of the presentation. I'm kind of covering off on how our new integration and partnership can help bridge sort of the gap in the entire prospect client life cycle. Josh, do you want to kick us off, kind of speaking a little bit towards some of the benefits that clients can receive through the partnership?
Yeah, no, and Dave and I already touched on some of this, but basically just taking the last slide and making it clear we don't necessarily do everything, but we do a lot of it in combination together. So, and I want to be clear, we are not a CRM solution, but we integrate with CRMs. We're able to bring that data in, create kind of the profile, help with tax analysis, things along those lines. So this idea, once again, of adding technology to this client acquisition and proposal management phase. Adding the capability to extract data and help with onboarding. It's funny to me that in this world versus the institutional world, the platforms don't really offer implementation. If you're transitioning a client from point A to point B, unless they're coming with significant assets, the fact that implementations aren't included, we can help do that. We can bring in 2, 3, 4 years worth of history if we have to. And so you can create this kind of very nice streamlined process, not only for your current clients, but for prospects early on. You can show them technology, you can differentiate through that technology, you can really help them understand why a transition makes sense, and you can do that in a way that's objective and quantitative, but simple in its use case. And so we will certainly get to that as we demonstrate. The combination with Bridge, as we've already said, the idea of once they've become a client, being able to filter that data in so you can constantly show them, whether that be on a monthly or quarterly basis, some of the analytics, the performance risk, diversification, taxes and fees that we have, be able to show that in context of everything that Bridge does on the portfolio management, portfolio accounting, billing and invoicing side, as well as ongoing client management, and certainly aspects of VRGL, kind of creating that virtuous cycle, right? This idea that you can be bringing clients on, reporting to current clients, bring more assets on, and continue that virtuous cycle. You know, the fact that you can really do a lot of that with 2 applications, you know, is very positive, and not really, you know, something that a lot of systems out there can do, to say the least. So, Dave.
Yeah, I would say, just to sort of echo a couple of things there, and I think the big one across, you know, what's illustrated here is around efficiency, right? And that's been a core to sort of our philosophy, you know, related to, you know, how much automation, how much can we streamline, both from a data acquisition and a data management perspective. So making sure you have that right data, and it's serviceable and can be, you know, fed into areas of the application that really need it to power either analytics or research or insights to drive, you know, sort of decision making. But then also, you know, across key areas, you know, things like client reporting or fee billing, or just generally managing, you know, your client relationships, ensuring that, you know, the tools that are provided allow the advisor to be effective. You know, they don't need to be overwhelmed with 900 different reports to choose from, and which ones they send to clients. It shouldn't take them 2 weeks to generate an invoice, you know, to send to their clients from a billing perspective. You know, they shouldn't have to go dig through statements and data to find, you know, if a money movement happened or if a trade occurred in a particular account. You know, how do you streamline that in a you know, leveraging technology in a simple user interface that allows the advisor to, you know, and the folks supporting the advisor to be, you know, to be as effective as they can be, while also creating a bridge or a connection to, you know, to their clients, and, you know, being able to see the same data, being able to access the same type of reports and information to empower that relationship is critical. And I think, you know, again, as Josh said, you know, we don't necessarily solve every bucket of that workflow, but when you start to piece together the power of what VRGL has built, and the core capabilities of Bridge, you know, there's a really efficient and a, you know, model there that streamlines a number of different operational workflows across, you know, what an advisor manages on a day-to-day basis, for sure.
Great. Anything else to add, guys, before we kind of transition into the demo portion?
I think I'm ready to go.
I'm
Sweet.
excited to see the demo.
All right, Josh, I am going to turn it over to you. Give me just 1 sec. Okay, you should be all good to set up a screen share, I believe.
I believe I'm good to go.
Awesome.
Let me share my screen. Y'all see my screen okay?
Looks good.
Fantastic. Well, guys, this is the VRGL application. You log in through app.virgilwealth.com. Immediately, you know, the perspective that we're going to be taking here today is the perspective of the financial advisor. And specifically the financial advisor's prospecting dashboard. That's really the workflow that we're going to be talking about here today. So what I see on my screen when I log in is a series of effectively bubbles on a scatter chart. Down here, we have the same table, just in table form. And really what we are plotting here is on a scale of -5 to 0 to +5 is basically the current portfolio of a prospective client versus the proposed portfolio of the prospective client, or a specific benchmark that I'm comparing them against. When I see that something is a -5, that basically means that it's worse performing or more risky. 0 basically means the portfolio and the proposed portfolio or benchmark are very similar in regards to that specific metric. And +5 means better performance or less risky in regards to the current portfolio versus the proposed portfolio or benchmark. And so when we talk about somebody like Jane Frank here, where we have a risk of +5 and a performance of -4, I will point out that this data is as of the end of last year, so different markets. So I will point that out. But we see a young lady here with basically $18 million. This is a real story. So this story actually happened to one of our clients, and Jane was a prospect of theirs. The only thing that's not real about this is her name. And so you've got $18 million in capital. She's 18 years old, cannot touch this money until she's 35. And so from that perspective, because of the trust and the way that it was set up, first off, the thing that we're going to talk about is how did the data get in here? okay? And so the data gets in here one of two ways. I, as the advisor, can either drag and drop this data in. So you have a secure portal that people share this information with you. You can drag and drop that information in right here. You can also invite the client to add statements themselves. This would be fully white labeled to your organization. You can create a custom email right here, and you send that off to that client's, to that prospect in their email. They would then click, get a screen similar to this that says, welcome to Virgil. Your advisor's asked you to upload your information. Please drag and drop, done, done, done. Your advisor will be in touch. That's what they see. To the extent you want to enter in some holdings manually, things like alternatives that you don't want to run through alternative process. I'm not going to talk about that today. If you're interested, we're happy to host a separate call. This is where we link to Bridge for ongoing monitoring. So the data gets in here really, really simply. And by the way, when I say statements, I'm referring to a real financial statement. This is a statement from Fidelity. Data gets into the system. The system goes to work and extracts every position, every transaction, every piece of realized gain loss, every fee from this statement. We have validation against totals and validation against summary tables that allows us to ensure that the information we're reviewing is highly accurate. All right. To the extent it doesn't work for any reason, you can see all of these worked. They all say processed. It will say validation failed or failed. Someone from our team will reach out immediately, let you know that they're on it. And we have a guaranteed 24-hour turnaround for things that fail. This would be things like scanned statements, screenshots. We'll see if there's any kind of pressing timeline. But the point I want to make is you no longer have to worry about extracting information from anything ever again. And we think that that can be valuable to people within the financial advisor community. From there, the analytics go to work. So usually it's a couple minutes to get the data out. Once that couple minutes passes, another couple minutes, so you're talking about 3 to 5 minutes to get the analytics and the data extracted and complete. And then you can see aspects of what's going on in the portfolio. So we're a little bit further downstream here. This is something an advisor's already reviewed. They've already made a proposed portfolio versus just a benchmark. But as I said, this is a young lady. She's 18 years old. You can see right away that she's basically in a 70-30 portfolio. The advisor used our application to basically propose a 90-10 portfolio back to her. Why? She's 18, can't really touch the money till she's 35. She's got 17 years worth of runway in order to go through the volatility of markets, but hopefully in a more equity-centric portfolio, you would expect outperformance over a 17-year period. I think I saw the stats, 0.1% of the time you'd expect underperformance. So we're calling out the portfolio versus the proposed. We're doing some of your style analyses. Some of you are probably familiar with, and calling out other metrics such as returns versus a benchmark. Thing I want to make very clear, this can be 1 month worth of data and we can back test that information, or it can be 24 months worth of statements that you can bring in, and we build that full transactional and position level history based on the information coming in, whether that be from one advisor or another. The other thing that I'll point out in the system, and we get asked this question a lot, maybe there's a specific account we want to talk about transitioning. Maybe there's taxable versus non-taxable. You can select and run these analyses based on the perspective that you have, or based on the type of account or types of account that you want to discuss. You can do that right here and rerun the analytics based on the specific types of accounts that you want to discuss. From the overview, you jump into the 5 pillars. And we believe, people ask why 5 pillars? Well, there's no necessary rhyme or reason to the 5 pillars, or could be 10. However, we believe that performance, risk, diversification, taxes, and fees are a good start to create a story. And usually when we talk to clients and talk to our clients about their clients, it helps really create that story. So what's the story Jane's data told us versus the proposed portfolio? Well, the story that it told us was that the current portfolio underperformed the proposed portfolio over the period of time. However, we only had about a 4% difference in volatility expectations. So the fact that we had a 10% difference in return and a roughly 4% difference in volatility perhaps means that we're not getting paid for the lack of risk that we are taking. And that's something that's important. Can't talk about return without talking about it in context of risk. Also, was it a specific asset class that created the outperformance? And we'll talk about attribution here in a second. It's funny when you see people with decently sized cryptocurrency holdings, you see massive outperformance because of it, and then not great this year. So that's some of the stuff that we've seen inside of the system. But we're not just calling out things like performance and some of the, ex post statistics that some of you might want to look at, such as Sharpe ratio, Sortina's. Are you creating alpha, or is the portfolio versus your portfolio creating alpha, or would it create alpha? We're not just saying how you've performed, but we like to call out why you've performed the way that you have. We think that this is an area that's sorely lacking in the wealth management. Everybody kind of says, hey, in the wealth management marketplace, everybody kind of says, hey, this is how you perform. These are the benchmarks we've selected you against. Well, it's surprising how many times, if you just take the same asset allocation versus the same asset allocation, and if you've got people directly trading securities and they're doing a poor job, or left it in all technology this year, how much just that security selection creates underperformance. In fact, we ran a portfolio the other day for a client where we saw 13% underperformance for basically the exact same asset allocation. Said another way, the asset allocation effect was 0. The security selection effect was -13. So bad stock picking was the reason for the underperformance. That created a question on behalf of the prospect. They transitioned 5.5 weeks later. So just examples like that. This was one that we actually ran a couple of days ago. So calling out where the out and underperformance within the portfolio is coming from. Another area we like to hit in, and this is a completely proprietary multi-factor risk model. This is something we developed in tandem with several institutions in my prior life. But the idea of what would happen in specific scenarios, in specific market stress scenarios. This is a multi-factor model. So what you see a lot of today, now again, this is from last year, this has basically 100% market factor. We'll see why that is when we look at the underlying holdings in the portfolio in just a minute. But today, if I were to look at a portfolio, certainly portfolios that have commodities exposure have had a hedge against the market downturn this year. Certainly things that have had a value exposure have had a hedge against the market downturn this year. And that shows up in this specific report. And so it's calling out areas of your portfolio that could act as a hedge or an enhancer of risk that you might be facing based on the timeline that we are discussing. But going back to our story about Jane Frank, we talked about the fact that we would put her in a more, the advisor said we put you in a more risk on portfolio. What they really wanted to show using our application was that if I said, the S&P 500, just as a comparison, we would expect to be up 30% over the next 17 years cumulatively versus your current portfolio. What would that mean for you? How much would you be leaving on the table? Well, you'd be leaving $3.7 million on the table, right? So we believe asset allocation matters. That's what the advisor said. You'd be leaving $3.7 million on the table over that 17-year period, something thereabout. That's what we would expect if you didn't potentially change your asset allocation policy with us. So, that's the risk, the ability to run scenarios, the ability to look at market stresses. That's an aspect of the application. The other area is diversification. We're looking at things like tracking error. Are there any missing markets, and what would the correlation be between the current portfolio and the proposed portfolio? Where is risk in my portfolio coming from? And what is the tracking error versus the proposed portfolio and my current portfolio? Correlation analyses. Everybody kind of takes a look at the heat map. Funny, this year, bonds have not been kind of an haven't been, non-correlated or inversely correlated to the equity markets. In fact, you just see a lighter shade of red. However, commodities have been. And so commodities are really the only area that we're seeing, for the last 6 months or so, really seeing kind of the ability to kind of be uncorrelated, from the overall markets themselves. And so showing kind of a correlation heat map of what's going on inside the portfolio. Are the areas that you would expect to be correlated or uncorrelated actually acting that way? And then ultimately, as I've said before, the holdings, this is actually a directly traded portfolio. We do full drill through. So we're drilling through all ETFs, all mutual funds, both on the fee and the exposure side of the floor. But what you can see here, going back to that risk, remember I said that basically 100% of the risk was coming from a market-based factor. Well, that's because we basically are trading in the Wilshire 5000 here. My largest single position is a 2% position in Microsoft, broad market exposure, hence the reason we have a broad, almost 100% market-based factor driving the portfolio risk in this portfolio. And so the holdings match the risk. The risk starts to explain some of the performance expectations. And then the big kicker was the charges. The big kicker was directly traded, plain vanilla stock in a little bit of bond portfolio. We're going to make this really easy. We're going to transition you to a 90-10. We're going to cut your fees down to 70, 75 basis points. That's going to save you on average, call it 35, 40 basis points a year. You compound that over 20 years, that's fairly significant. Even assuming the same returns, you can see almost 100% of those costs, because this is a directly traded portfolio, is coming from the advisory and the SMA costs. Again, when you have a heavy ETF mutual fund, sometimes the big banks are really guilty of this. Come from a Goldman financial advisor, the top 10 funds they got you in are Goldman funds charging you 1%. So the blended fee is not just the advisory fee, it's actually 150 bips. We see that quite often. All of that gets called out in our capabilities here within the application. So again, full look through, full transparency on the fee, on the diversification, on the exposure side of the floor. And by the way, it's also making its way into risk. We're looking at the underlying securities of portfolios as well within ETFs and mutual funds, not just the regressions of the ETFs themselves. And then finally, taxes. This is an area people either love it or don't see much value in it. A lot of people really like it though. Basically what we're doing is we're calling out, what we're calling out here is, in this case, 22% of my capital gains have been deferred. Said another way, 88% of my capital gains have been taken. 100% of my dividends are qualified. Only 71% of my losses have been harvested. And of those gains that have been taken, 81% are long-term. Doesn't necessarily throw up tremendous red flags. However, you've got a little short-term activity in the portfolio. You are taking capital gains, not necessarily offsetting all of your losses. Could be an area of kind of Q&A with the advisor. Sometimes we see, tremendous red flags here. In fact, we had a client who's paying us, I won't call out exactly what they're paying us, but we'll just say it this way. They brought in a prospect from a big bank. That prospect had 30% of their portfolio in structured notes. They had no idea because it's 280 pages of statements. And so when we ran it through, they said, I had no idea. I thought it was 5 to 6% in structured notes. Started asking questions, finding out over the last 6 months, when they brought 6 months worth of statements in, that they had been auto-calling these structured notes and buying back in at roughly a 1 to 3% fee per structured note purchase. They transitioned to $16 million portfolio. It was a 4x ROI on our application in 2 weeks. And so those are the types of things that we're seeing with VRGL as a part of the prospecting process and the client acquisition process. Ultimately, just to kind of wrap up here, as you think about the application, it's not only this aspect that is really the advisor's desktop, so to speak, the advisor's kind of dashboard. You can build a report directly in system. So I've already created one. I can click create report and actually drag and drop widgets. We show you what the widgets are right here. You can name that report and save it. I'll show you one I've already created. I can click print. This, of course, would be white labeled to your firm, but I can click a printable and create a printable report right here inside of system. All of these are actually available via our Excel plugin as well. So you can Excel plug in all the data, all the widgets can come out via the Excel plugin. You can then add that to a PowerPoint or a proposal template, just change the name, click refresh, and you've got a brand new set of data to use in your proposals. And in about a month and a half, we're releasing our full tax transition analysis, our full proposal management solution, which actually allows you to upload a PowerPoint into this application and actually build a custom report directly from the application. This is great for compliance. Compliance might say you can use these 5 analytics. You can build a report off of that. You can talk to the other analytics in the system. We've seen that a couple of times, and then really kind of lock it down, so to speak, from the compliance perspective. So really caring about the full workflow. Data gets in there seamlessly. Statements come in. The extraction's our problem. You can run through the analytics, actually get a forensic analysis, a roadmap to close, so to speak. Ultimately, what are we? We are a sales enablement tool, and we're saving the opportunity cost of having to go through this data yourself and hopefully providing a roadmap to potentially win the business. Or just as importantly, if you say there's no way I'm going to beat this portfolio and no way I'm going to lower the fee or anything along those lines, don't spend your time. Getting a no is sometimes just as important as getting to yes. So with that, guys, that's the demonstration I give here really quickly today. Usually that takes about an hour, but walked through it pretty fast and appreciate the opportunity to do so.
Yeah, and I think with the last 5 minutes that we have together, if we could just go through a couple questions. Looks like we have one for you, Josh, regarding, you had mentioned that the advisor can leverage their own preferred CRM platform. So this individual is curious what CRMs integrate well with VRGL.
So we're currently doing Salesforce. We're also looking at Redtail. Those are the two that we've done so far. Practify has been put on the top of the list as well. So we are currently in process of integrating or do integrate with those solutions.
Awesome, thanks. Nextly, also regarding the VRGL platform, this advisor is curious sort of what the onboarding process looks like and how long it takes to get up and running with you guys.
It's basically one day. All you've got to do is we effectively have to set up our two-factor authentication. We do have a pretty formal process where until all of our training is fully up and running, we're actually investing in our online training and everything right now. For library, we're pretty active in like the first 3 profiles that you set up. We want to hear from you. We want to watch you do it. We want to make sure you're feeling good with the application. But that's more us hand-holding you. So, really it's, sign and you're up and running that day. That client I mentioned with, the 30% plus in structured notes, they signed the contract that day because they said it was a $17 million client. They said, we want to use it for VRGL. We ran their data through 3 minutes after they signed the contract. And they won the client, about 2.5 weeks later. And so it's really an immediate up and running situation.
Awesome. We also had a quick follow-on question from your first response. This advisor asks, is it Salesforce Financial Services or Sales Cloud, which you guys integrate with?
I will need to follow up. So Carolyn, I don't know if you can, get the name, but I will check with my team and actually follow up on that. I do not know.
Yeah, absolutely. To the individual that posed that, we will send you a custom follow-up with a direct response to that. So thanks for bearing with us on that. Of course. And then lastly, we had an advisor that's inquiring if they're interested in learning what it would look like for their firm to work with the BridgeFT and VRGL partnership. What is like the next step for them in terms of vetting that out?
Dave, you want to take that one?
Yeah, I think anybody who's interested in learning a little bit more or taking a deeper dive on either VRGL or the BridgeFT Atlas platform, happy to have those conversations. I think on the next slide, Carolyn, you have some contact info for folks to reach out. You can reach out to me directly. And we'll be sure to get you routed to the right folks on our team, or feel free to reach out to Josh, and I know he'll get it routed either way as well. But happy to have sort of deeper conversations. Again, we're excited about the partnership. We're excited to see the tremendous progress and being able to power the VRGL set of tools, and really looking forward to having deeper conversations with folks. The feedback to date, as we're out on the road showing this to prospects and to clients, has been extremely positive. And we truly think it's a game changer in how advisors and even firms who are servicing advisors, can one, acquire clients, but also maintain those relationships longer term as well. So super excited about it.
Great. Well, I just want to say thank you so much to everyone that took the time this afternoon to join us. I think this was a really great session. And thank you so much to Dave and Josh for presenting today.
Thanks, Carolyn. Thanks, Dave. Appreciate it.
Thanks, Carolyn. Thanks, Josh. Everybody have a great day.
Everyone, have a great day.
All right. Thanks a lot.